Alrighty guys, what a journey it has been. It's episode number 20, the final episode of the FVT Trading Bootcamp. And in today's episode, I wanted to kind of wrap things up. It might be a slightly longer one, but I also wanted to answer a few questions that I've got on YouTube and also privately in my DMs, because I think this is going to help a lot of people. Now, we've gone literally from A to Z, and everything that I've covered in this bootcamp is everything that I personally use to trade. There is no, secret model. There's no secret strategy. There's nothing that I do extra that I used to trade that I haven't taught in this bootcamp. The only difference that maybe I've done that maybe other people haven't done is the chart time, the chart experience. Those are the only real differences between what I put out and what some of you guys might have done. And guess what? You are going to get to that point where you have that chart experience, where you have that, that confidence in the markets, but you have to submit the time. So I think it's been a really good series. If you go back into my YouTube channel and you go into the playlist section and you have a look at the FVT Bootcamp. So we've gone through a lot, over these 20 days, we've gone through a lot. If we go back to the playlist, the first day was an introduction. The second day we discussed candlesticks. The third day was market structure. And I want to just point out that market structure, guys, is just as important as time. I used to believe that time was more important than structure, and I know some people do, and there's nothing wrong with believing that, but for me and how I trade now, market structure is just as important, if not more important, because without the structure, it doesn't matter what time you have, there's going to be no entry model, there's going to be no target of liquidity, so you need to have the structure as well. So we discussed candlesticks, we discussed market structure, we discussed liquidity, which drives the market. And again, guys, the market only targets two things. The first being liquidity at swing highs and swing lows, and the second being fair value gaps. And just at the start of the video, watch yesterday's video. Yesterday's video, I actually talked about a few things, and one of those things we saw yesterday, New York AM session, one of my mentorship students, my premium students, right, that I one-on-one coach, he actually said that he talked about exactly what I talked about yesterday, which was the 9:30 to 10 Judah swing. But I talked about in yesterday's video, episode 19, that if the market goes down for 2 sessions, the third session's probably going to reverse. And we saw that yesterday. Look at this. Asian session goes down, London session goes down, and what does the New York session do? The New York session has a massive reversal. So longs yesterday, if you took them during the New York session, fantastic. If you took longs in London session and you got stopped out, that's also okay. It's a part of the process. And I wanted to make a quick point about that too, right? You're not going to win every trade. And I know when people lose, and it's very easy to tell on social media because people go quiet, but I want you guys to be encouraged to post your losses, to post your wins. I've been posting on my Twitter, very frequently, the winning trades, the losing trades, when I've got chopped up. I've discussed that because that's the reality of trading. There's always going to be someone else on the other side of the market who is doing opposite to you. Sometimes you're doing very similar things to the next person that trades ICT, but other times you have a different narrative, a different bias, and that's completely okay. There's always going to be a time that the market favors your way of doing things, but you just got to stay consistent enough in the application of your edge to allow the market to do that. So you can see here from yesterday, we stepped down in 2 sessions. If you're curious about what the power 3 or Judah swing is, it looks something like this. So we have accumulation right here. We manipulate down. You can see that here at 9:30. We sweep out these lows, but more importantly, if we go back to a higher time frame chart, you can also see, look, that we sweep out this external low. So this is like an A plus setup. We sweep an external low. We've been stepping down for multiple sessions. We've got the power 3. We've got a really nice clean inversion fair value gap, right? Everything here is just perfect. Entering right here, placing a stop loss down here, and then taking the price higher, which is really important. So we discussed it yesterday. That still is relevant. It's a really easy way to approach the markets, and that is market structure too. Then we talked about how to set realistic trading goals. And my big point there was that, have goals, but have attainable goals. Don't be the person that gets caught up on wanting to chase money, because you'll never have satisfaction if you're just chasing money. You need a bigger why. You need a bigger reason as to why you're doing this. It could be for your financial freedom in the future. It could be for family. Could be investments, whatever it might be for you. You need a bigger why or a bigger reason as to why you're trading and why you're doing these things. Otherwise, you're never going to be able to keep going. When you have a few losing trades, you'll never be able to keep going, because if all that drives you is money, then when that money doesn't come in, then what's going to drive you? Nothing, and you're going to give up. So have other things to do outside of trading that bring you satisfaction, and have a bigger reason or a bigger why. We then discussed ICT fair value gaps, and we talked about fair value gaps, we talked about inverse fair value gaps. Guys, the market really just moves on market structure, and fair value gaps provide support and resistance. There's nothing more you need to know about that, but you need to study it. And you need to get screenshots, and you need to collect data and gather data and make sure that you're doing that consistently to ensure that you're, seeing those repeatable patterns. So we talked about normal fair value gaps, bullish, bearish, inversion fair value gaps. We talked about dealing ranges. A lot of people struggle with dealing ranges. I want to talk more about it today. We talked about session times, volatilities, order blocks, power 3, which we saw right here in the charts, the power 3 concept. So notice how all these things I'm talking about in the bootcamp, they are individual concepts. And then we talk about macros, we talk about psychology, and then we get into, I think it's maybe day 15, somewhere around there. I talk about my A+ checklist, and that's in the Discord, it's in the free Discord. Now, like I said, I think in yesterday's video, it's not necessarily going to be enough just to download that checklist and think you can just use it straight away. You need to study each thing on that checklist, which is pretty much all the things you've gone through in the bootcamp, and you need to study each thing, collect data on each thing, and then collect data on how these things combine. And you can see in the next couple of videos, I talk about ICT daily bias, talk about, collecting data, how I did it, how the fact that trading does not have to be some fancy thing. Like, you just need to mark out what's relevant and stick to that. Just don't worry about the next PDRA that comes out. Don't worry about the next strategy that comes out, because in reality, it doesn't matter. And I tell this to a few people, and it's just the truth. Don't worry about what the big influencers are doing. Don't worry about them. Worry about yourself. Worry about what you're doing. Just because a big influencer marks something out, it doesn't mean that you have to have that as a part of your system. Some people, and I'm not going to name any names, I think, and big influencers, big creators, they purposely make things more complicated to get ad revenue and to also keep people hooked. Because unfortunately, how the psychology works in the human brain is that if someone is not succeeding, if you're struggling, these people will make more content, more PDRAs, more things to post out. So you believe that that next thing they post is going to be the secret or the key for you to be profitable, but you already have enough. And so I want to really just reinforce that point. You guys have enough already to be profitable, but it's up to you, and it's going to be up to each individual to realize that you don't need to study any more of ICT concepts. You don't need to study the suspension block. If you want to do it, but you don't actually need to. And if you're not profitable already without these new PDRAs, then what makes you think that you're going to be profitable studying new stuff? It's really not the case. You go to any, big influencer who I think are great. For example, Kane, Trader Kane, he trades so simple and he uses dealing ranges. Jade Cap, similar thing. And notice how a lot of these big creators, a lot of these big names that have made a lot of money, they trade very simplistic. They don't actually mark out these new random PDRAs that come out. They don't do that. So if they don't do that, then what makes you think that you should? If you're not profitable already, it's not a matter of finding another shiny object. It's not a matter of finding another strategy. It's a matter of finding yourself and looking inward and reflecting and understanding that you are unprofitable and I was unprofitable because of what I did and my actions and your actions, not because of the strategy, not because you're using the wrong PDRAs. No, it's because of you. And maybe because you haven't collected enough data to be confident to continually implement the edge and the system. So just keep that in mind as you go through. So we talked about that. We talked about the checklist. We talked about, the truth about losing trades. You're going to lose trades. It's going to happen. And, I've built my system in a way that maybe a lot of the generic traders and people don't agree with. But what you're going to find with any person who pulls out consistent money, they are not afraid to take losers. There's many people that you see on social media and you'll see them take 2-3 losers in a row, but then they take a 4th trade. So I'm not a subscriber to 2 trades and I'm done. Usually 3 trades and I'm done, but it all depends on the amount of risk that I'm risking. And you got to keep in mind that each individual trade has its own probability. So the reason why people say, take 1 trade and be done, or take 2 trades and be done, is because for a lot of people, not necessarily you, not necessarily me, but for a lot of people, once they take 2 losses, mentally and psychologically, they're unable to implement their edge in the correct way. However, for me, there are some situations where I can take 3 losses, they might be small risk, and I'm still mentally clear. I'm still mentally seeing the charts correctly, and because of that, I'll take another trade. And again, you're going to find your sweet spot. Your sweet spot might be 1 trade a day, might be 2. It might be flexible like myself, but you've got to start from somewhere. Try something for a couple of weeks. If it doesn't work, tweak one thing, see how that goes, and then just keep moving forward. Keep that momentum, which is really important when it comes to trading. Momentum is really important. And then one of the last videos I posted was about common trading questions. So I wanted to discuss something that someone asked me on YouTube. I think it was like yesterday. It was a really good question too. And a lot of people struggle with this, and I kind of did to start as well. But the question was this, right? Let me just try and find it. So the question was this. Someone asked, and you'll know who you are. What do you do when price is inside of a macro, you've got everything lining up, but you find an opposite fair value gap which has not been mitigated yet, right? So for example, let's go here and let's go to the 15-minute chart. All right, now, when you look at what price has done, let's go to a few sessions, and I want to talk about how this is just probability, right? A lot of people can't accept that. And the first thing that I really need to point out for you guys is that you're not going to win every trade. So sometimes the best thing to do is to accept that it just didn't work out. I think too many people are trying to perfect every single losing trade. Like, sure, you can fix some things, but it gets to a point where you got to realize you can't fix everything. And if you're going to keep trying to fix things, you're never going to progress. Just be satisfied. If your win rate is 50, 60%, you're making money, just be satisfied. Like, literally be satisfied with profitability at that level. If you have 70, 80% win rate and that works for you, be satisfied. Like, you don't need to always fix things. And that's the constant chase a lot of people get caught up in. And like I said, the new PD rays that come out, the new things that come out, they prey on people that have that mindset, because these people know that these people are looking for the next best thing. And unfortunately, that's detrimental to a lot of people. So let's do this. So here's an example, right? Now on the 15-minute chart, you can see our price sweeps out this level of sell side. You can see that, right? We do that. Now, here's the thing. A lot of people get concerned and they say, well, Ruben, yeah, I might look for a long position here down the bottom, but what about this 15-minute bearish fair value gap? What if price reacts from it, Ruben? What if we come up here and then we reverse? Like, what if this happens? What if it happens? And you can see what I'm doing with my tone. What if? Oh no, what if? Just relax the tone. Relax. It's fine. If, and here's the way to put it, relax. Take a step back. Take a breather. If price engages this fair value gap and you're in a long position, number one, just realize and accept, yes, it could reverse, but it doesn't have to. It could go up and it could reverse. Number two, by that point, you should have taken a partial or at least mitigated your stop. And number three, in this case, because we have swept external sell side, you kind of anticipate for price to go to internal buy side. Right? We sweep external, you kind of expect at least, or I expect at least in this situation, because of all this low resistance, I expect price to go here. But that comes with an understanding of market structure and having a look at the other videos in the bootcamp and also chart time. So if we go back now to the 1-minute chart, look, right? Someone might say to me like this here is a 15-minute fair value gap. And maybe you don't take a trade down here. Maybe you're late and you want to catch a, continuation. So maybe you like something here. This is during the macro. You go, oh yeah, cool. I like this, I like this, Ruben. I want to take a long position from here. But you're afraid of the market reversing from this 15-minute fair value gap. The first issue, you gotta go back to why you're afraid. And the reason why you're afraid is because you don't trust it. And the reason why you don't trust it is because you haven't collected enough data. And the reason why you don't trust it as well is because you're not accepting probability. So notice how every single bit of fear comes down to not trusting, and not trusting comes down to not having enough data collected, and that comes down to the effort that you need to put in as a trader, and also not accepting probability. Because here's the thing, someone could put in all the data collection and they go, oh yeah, cool, I see it happening, but they still don't realize that it's probability. They still think they need to fix every little bad thing about their trading. They still think that they're going to be perfect. They still think that they're going to make no mistakes. There are other days in the market where, yes, we would come up here and we would sell off. And then I guarantee you in those situations, you're like, oh, why did I take a long? And you're gonna think negative about it, but there's no point about thinking negative. You might as well think positive and have solutions to what you're seeing, not problems, not victim mentality. Victim mentality gets you nowhere in trading. It literally gets you nowhere. So my advice on this, because you've reacted from a higher time frame point, and if you're like, oh, I like this long position, but I'm afraid that it's going to reverse from here. Well, you got to target that mindset. You got to collect more data, and you've got to write it down if you have to every single day that you're not going to win every trade, and that probability is not always going to be on the side. Simple as that. You have to accept that, consciously, and then it'll get implanted subconsciously. And then once you do that, you're not going to have those thoughts. Like, I don't have those thoughts anymore. I don't have the thought of, oh, what if price reverses from here? No, if my draw on liquidity is higher, if I've seen the price reverse from a higher time frame point, then I have trust in the system. And if that doesn't work out, it doesn't make me, get super upset and, oh, my strategy must not work. I'll just move on. Simple as that. But you need to get to that point, and it takes time to get to that point. So in this example, there's a few reasons why I won't expect it to reverse. But you can see this in other examples too, right? So say on the 15-minute chart, so let's go back here, right? You can see sometimes, we do react from the 15-minute fair value gap. But by that point, you should be out of the trade. So say, for example, or you should be at least mitigated risk. Say, for example, this 15-minute bullish gap, this was the other day in Asian session, really, really good session, right? Let's assume you took a long position from here. And let's go back onto the charts, right? And you're afraid, here's another example, you're afraid that the market is going to react from this fair value gap here. Always think about where you're reacting from first. Where is price currently sitting? Price is currently sitting in a 15-minute fair value gap. Okay. What liquidity has the market generated on a small time frame? Buy side liquidity. Buy side. Don't worry about the gap. It hasn't even engaged it yet. Don't worry about it. If it engages it, then have a think about it. So at this point in time, yes, there's a 15-minute FVG up here, but don't be concerned about it. You need to literally, see you later, mate. Fair value gap, who cares? That's in the future. It hasn't been engaged yet, and even if it does get engaged, there's no guarantee that it's going to be respected. It might not be. So you got to keep it aside. You got to put it aside. Say, see you later, mate. I'm not going to have that in my thoughts. And the sooner you do that, the easier it's going to be. And so in this macro, you push higher. So let's assume you take a long position from here, right? Say you take a long from here, your stop goes there. And now we are inside of the 15-minute FVG. Well, guess what? You take a partial at 1-to-1. You take a partial. So just in case the price reverses from here, you make your money, right? And if price decides to push higher, then fantastic. If price decides to reverse, well, you've taken money off. And this is the benefit of scalping. This is the benefit of, take a partial at 1-to-1 and then move. And then let the trade do what it needs to do. So hopefully this helps. I do understand the concern, but the realistic, answer here is that you need to work on psychology, trust, and also just focus on what's immediate, right? So if you're entering a long position here, the immediate liquidity is here. Once you take out that immediate liquidity, then consider partialing. Don't be greedy. Don't go, oh, I have to let it run like up here to make money. No, don't be greedy. Take a partial, or at least trail your stop, so that way, even if we do reverse, it shouldn't concern you. But I thought that was a really, really good question, because a lot of people get concerned with that. They're thinking about too much at once. Number one, what's the area price is in? Number two, where's the next low-hanging fruit? That's all you need to think about. Manage your risk. Once you take out low-hanging fruit, then you've taken a partial, then you can just observe. And even then, don't worry about it. Like, when you take a partial, just expect price is going to move higher. And if it doesn't, well, it doesn't matter. You've taken money off the table. Don't worry about things that haven't happened yet. Don't worry about things that haven't happened yet. Worry about what's actually happening with the market currently. And that is your risk management and managing your trade as you're in that trade. That is what's important. Like, focus on the now. Don't worry about the future. That provides a lot of anxiety for people in life, in trading. Worrying about the future, worrying about the next trading day, that fifth winning trading day, worrying about this, worry about the current situation, worry about the trade that you're currently in, worry about the risk management of the current trade, the nearest drawn liquidity. That's all you worry about. And then when that drawn liquidity gets hit, then go to the next, because you don't have all these things in your mind. It's stressful. I know. I've been there. So that's my advice. And now let's conclude the video. It's been about 20 minutes. So we've discussed heaps. We've discussed heaps in this bootcamp: psychology, this, that, everything. And my advice, if you watched it, go back and watch it again. But for any of my videos, and I've mentioned this before, you don't want to just watch the video. You want to watch the video and you want to find at least 10 to 50 examples of these things happening. Because if you don't find examples of these things happening for yourself, it's going to be very, very tricky to actually implement it. The next step is to join the free Discord, right? The link to that is in the description below. For me personally, I'm kind of easing off for the rest of the year, and I'm easing things off, right? I'm still here. I'm still going to make YouTube videos. I might have a couple of days off now and then come back into it for the new week. And I'll be preparing a few things for you guys for the new year. But again, stay strong with it. Keep pushing forward. Keep grinding. You know, if you have any questions or concerns, leave them in the comments below. Join the Discord, send me a DM. That's completely fine. And it's been a great, a great experience and a great ride with you guys too. It's been a great one. And I want to say a big appreciation and a big thank you to all you guys to not only subscribing, not only to liking these videos, not only to, you know, joining the free community and to building that community too. Like even this YouTube channel here, it's grown crazily fast and it's because of you guys. The Discord, same kind of thing. And not only it's grown, but we have a very good community in there with people that have the values and the mindset that I actually wanted to achieve when I created the Discord. So I appreciate you guys, I really do. I'm just a regular guy from Australia, 26 years old, you know, trying to make my way in trading and hoping I can help other people do the same thing. And I just want you to remember that I've been where you are. I've experienced all those bad things, and it's going to be a constant work in progress that you have to put up with in order to succeed. That's just how it goes. But I do believe that if you watch all this bootcamp and you put in the work, and I see it, I see many people messaging me, showing they got payouts, showing their past accounts, and they're using these concepts. I see the success, and I'm proud of you guys, and I know that you can do it. So if you're struggling, keep going, keep pushing. If you want to, you know, talk to someone, my DMs are open, the community, you know, join the free community, and we'll go from there, guys. So I hope you've enjoyed this bootcamp. This is my gift for you as well for reaching 10,000 subs. And we're going to move on to the next video, to the next thing. I appreciate all the support, guys. Have a fantastic weekend. All the best. I appreciate it. Let's move on. Let's go.